All right, joining me to unpack the markets news of the day, Ntombi Yumbusa Mbuli of Sentio Capital. Thanks very much indeed, Ntombi, for coming in. Let's start with some of the main drivers. I mean, of course, the real reason that markets have been moving in the way they have today was we still have this trade war tension, don't we?
Definitely, that's absolutely correct. So what the market is concerned about is the global growth, and with the 5% tariffs that Trump has announced for Mexico, that just means, well, you can imply that the North American Trade Pact that they have just signed is basically worthless. It's not worth the paper that it's written on. So this just fuels those concerns around global growth and global tariff wars, and so it brings to question just the rate of growth that you'll see in Europe and in China, and of course us in the emerging markets, we won't be saved from that. We'll also feel the effects of that.
Interesting. I mean, we had a pretty good performance in the first part of the year as far as the JSE is concerned, so it's interesting to see we lost almost 5% in just 1 month.
That's right. Well, they say sell in May, go away. It could be that, or it could just be more likely that it is the global growth concerns, trade wars, and us as emerging markets, we're not really at the driver of global trade. We're more beneficiaries of that. And with those concerns and that negative sentiment, you find that there's flights to safety assets, so flights to treasuries, the US treasuries, German treasuries, and such, and the yen as well.
What do you make of the rand's volatility? I mean, that's been moving up and down, but I guess, again, these are international drivers, and we've seen a little bit of a comeback in the evening. What's that about?
It's generally just some sort of confidence coming back into the SA markets, looking through the global factors and seeing that, well, the domestic assets do look cheap. And so you've seen some buying coming into retail. You've seen some money as well going into the banks as well. So some of the fundamental drivers and valuation drivers coming through on that.
I want to shift us to some company news now. I mean, a very good showing from the clothing retailer, Mr. Price. And, you know, they achieved this under very, very strained consumer conditions. And I see their share price up 11%. We'll take a look at that in a moment today.
So on the share driver, I think that there is an element of short squeeze on that. You did have, the results came in line with where most of the sell-side analysts had it, but you saw some selling coming through over the course of the week, and the concern was that they would disappoint the markets. You have seen some soft numbers that have come through from the likes of Pepco, and there were concerns that this would be broad-based. And if you do look at the numbers, 4.4% turnover growth in the Mr. Price Group as a whole. But if you look at the comparable sales numbers, those are just up 1.6%. So that pressure is there. And what has helped the company is that they have a significant portion of variable costs. And that's important because when your sales growth is muted, relatively muted, as it is currently, your costs are able to also respond to that. So they will also grow in line with your top line growth, and you don't really have a large fixed cost base that will just decimate your profits. So at the end of the day, they did realize earnings growth of 6% and the dividends as well of 6%. So it's really a well-run company. Those market concerns really proving not to bear fruits. But going forward, you know, they are largely an SA domiciled retailer. They have exited Australia, which is very positive from a capital allocation point of view. But you derive most of your profits in SA, and so you do need the economy to recover. They're also talking about a recovery more so in the second half of their financial year.
Indeed. The other big story, I mean, Tonga Hewlett, I mean, it hasn't been such a great few months for them. And now I see they're having to restate results. Whenever you have that phrase, you think Steinhoff and you think some of the other big companies. What do you make of that news?
That's very negative. They had told us earlier that they will delay the FY19 results from around about May to the end of June. And then with this trading update that they've given us today, they've said that that will be delayed further until October. So they're still finalizing those results. They're still trying to get to the bottom of the issues, and they will also restate the 2018 numbers as well, the 2018 financials. So it seems that the issue is really around the land sales portfolio, where the booking of profits probably being too aggressive with recognizing the revenue, and so the cumulative impact will be between a 3.5 billion and a 4.5 billion to equity that will come through in the 2018 numbers, which is around a third of the equity that they have on the books if on the current 2018 numbers, and then they're still finalizing the 2019 numbers. So definitely signs of corporate shenanigans, something not really going right there. And you've also had some resignations that have come through as well. The CEO as well as the CFO have both resigned, and you've got new management now in place. And you've also had a non-executive director as well, who was head of the audit committee, also resigning. So definitely corporate SA taking a bit of a beating from the previously really stellar reputation that we've had in the past couple of years.
Indeed, interesting one to watch. Well, Ntombi, thanks very much indeed for coming in and sharing your insights. That was Ntombi Yombusa Mbuli from eNCA Capital Management.